Morning all. How are we doing? Another fun day in the markets. Especially fun today. Interesting day. Morning, Mark. You got your EA sorted on the VPS? Cool, yeah. So basically, everything you buy through the MT4 marketplace is encoded to your PC. So all the indicators, EAs, everything you buy is protected. So if you try and use whatever you've downloaded on another machine, it will go, sorry, this isn't where it was bought from. So you have to download it from the terminal for every PC you get. And every license is one PC. So if you get a VPS, you need to download it again, unfortunately. Bit of a faff, but... Sorry, I'm supping on my second cup of coffee this morning. I was out last night for my nephew's party. Didn't have much beer, only a few, but the dog woke me up at 3:30 this morning, and I've been spinning at 6:45 this morning, so I'm knackered. Morning, Ricardo. So today, morning Aseni, a little bit of a different session this morning. We're going to have a look at all the pairs, have a look at what's going on with Ukraine, have a look at the news as usual. Trade safe today. Not sure exactly what's going on. There's a full-scale invasion of Ukraine underway. So how that's going to affect the markets is very, very difficult to tell. I've taken a couple of positions this morning on oil. Oil's gone through the roof, as you would expect. So I've taken one position, a very tiny little one at the minute. And I've got one on a pullback ready to go. On a pullback there. We're at 150 ADR on oil already. This is all-time highs for oil. We hit $100 a barrel, basically. If you look, we popped off at 99.74. So basically, we're pretty much $100 a barrel. I've got a feeling that's going to go higher. So I've just taken a quick starter position in that. And we'll see what happens. But yeah, so oil will typically go up because obviously the oil pipelines will go through Russia and Ukraine. And obviously Germany has just halted the pipeline it was building with Russia to get more of everything, oil and gas and everything into Europe. So yeah. Morning, Andy. Michael Franco. Busy, dizzy night. Yeah. So yeah, taking a starter position on that. I've just taken a DAX gap fill, risky one this. So markets across the board are down today. We had a down day yesterday as well. We didn't get the pullback I was looking for on the indices. I was looking for a good couple of day pullback. Didn't get it yesterday. I didn't trade yesterday really. I traded a little bit on my futures account, but not a lot. So I didn't really get a chance to do that. Would have been a nice day yesterday. But I was looking for a couple of bars pullback to 24 and it's not happy. So we are properly bear market now, especially today. Today is a massive down day so far. DAX obviously has gapped down hugely, so I'm playing this gap fill. I've got a target up there obviously at the gap fill, but I'm just keeping an eye on this level at 125 ADR as well, because we might not make this gap today. I really don't know what's going to happen today. Tech's obviously down, S&P down. We've got that low broken now, so the market structure is officially in second leg bear market, looking for a pullback drop. And obviously the Dow's done the same, so the Dow's now broken as well. So market structure on the Dow is there. Interestingly, the Dow was not interested in gap fill. If you look at the S&P and the NAS, they were not interested in gap fill either. So this is why I'm thinking this is a bit of a risky one I'm taking on the DAX here, because it doesn't look actually now like it really wants to do the gap fill either, but we'll see. So it's a risky one. High risk, high reward. It's a nice reward from where I got in on my initial position. Stops under there on all four positions I've got on. I'm not taking any more. This is either going to hit it or it's not. I don't care, one way or the other. It's either going to work or not. So we'll see. So yeah, so very, very difficult to know what is going to happen today. news-wise today obviously is kind of paled into insignificance, but we've got GDP for the US dollar at 130. With unemployment claims, we've got crude this afternoon. Crude inventories, be ready for another massive spike on crude at 4 o'clock. And then we've got a couple of talking heads later on. So 1:30 before the market open is the main news. 1:15 we've got Bailey talking as well. You never know with any of these orange talking heads. You never know what's going to happen. So we could get something happening off of that as well, but we'll see. And then tomorrow we've got PCE for the it's all US dollar tomorrow. PCE, University of Michigan, which is a leading indicator for the analysts, and we got Waller speaking as well. So obviously all of this is going to be dwarfed by anything that happens in here. Belarus gave orders to integrate with Russia army. So yeah, I mean, with what's gone on today, you know, overnight, your guess is as good as mine with what's going to happen with the markets at the moment. FX doesn't seem to be particularly affected. I've got my other monitor up, which is monitoring all the majors. And there doesn't seem to be a massive... We've had some movement, but there doesn't seem to be any massive knee-jerk reactions in FX. We'll wait for London to... Oh, London's opened. Yeah, so London's not doing a lot either. So we'll wait and see what happens with FX, but I don't think there's going to be a massive impact on there. The indices... and commodities are the main impacts, I think, is what we're going to find. Obviously, gold, massive spike this morning. Again, as you would expect, we're 150 ADR on gold, tangible assets. The Dixie, we've had movement on the Dixie, positive. Not massive, but it is positive, obviously. We didn't come down and do my little run on the liquidity, which I was expecting, and we are now officially up. So US dollar longs, away we go. So we'll have a look at all the FX pairs in a minute and see what is happening. But we'll just going to start off with comments as well. I made it out of Aussie dollar Swiss with a profit yesterday, thanks to the strategy of not using stop losses. Excellent. That's good. Of course you make it out with a profit if you don't use a stop loss, because you can't get stopped out. That's the whole point. It's good. Took a buy on the US dollar CAD 2 hours ago, getting the pips, but watching oil, risky play, but keeping eyes open, keeping my position small. Yeah. Morning, Rahat. Yeah, oil. This is again high risk trade. I've had a good month. I'm happy to take high risk trades at the moment. I'm chasing this. You shouldn't chase. We always say, you don't chase it. If it's gone, you missed it, never mind. But this is gone, and I don't think it's going to stop. I've no idea what it's going to put in today from an ADR perspective, but we're already at 150 ADR, and it's not showing any signs of stopping. The only down candle we've had has been a massive hammer. So, yeah, I don't know. If this pulls back, I don't think it's going anywhere but up. So I'm going to build a position on oil. And I'll get out when I think I've got enough in the bank, really. But I'm starting very, very small on it. It's got high margin requirements, unfortunately, oil. So, yeah, not a lot you can do about that. Just keeping an eye on my DAX gap fill as well. So just quickly start off. Obviously, I restarted all the EAs yesterday. Market reverse alerts EAs. So overnight banked. What did I bank? Where are we? What's the 24th today? Euro odd on H1M5. A little long from there to there. Zoom in a bit so we can see what we're doing. So yeah, Euro odd. Nice quick in and out. Those Euros were absolutely shot. Euro New Zealand Euro odd. I told you we were going to get a pullback on them. I played the pullback and got it. Lucky. I don't normally long the Euro. It was a risky one, but it worked. But it was very extended. So I've got Euro New Zealand long on as well. That one is still in profit. And I've got a Euro US long on, which has been taken by the EA as well. I think we're going to get some decent volatility on the US dollar. I don't think the US dollar is going to scream off. It's moving this morning, but I don't think it's going to go crazy. So I'm quite happy with that trade at the minute. Also, H1M5 banked Euro odd as well. Oops, sorry, no, hang on. No, I didn't. New Zealand Swiss. That was a short. New Zealand Swiss. Pound New Zealand banked that one. One shot. These were all one shots. That was a tiny little profit. Oh, there's two positions, that's why. There we go. So it took two positions on the Pound New Zealand. I was going to say, why did it get me out there? That was a tiny little trade. It's two positions. There we go. So Pound New Zealand long out of that one, and Aussie dollar CAD. So quick short, Aussie dollar CAD. So that was nice. Trend, basically the same thing. New Zealand Swiss, Pound New Zealand. And COT report alignment, nice big profit on that, 3.5% this morning. Aussie CAD, New Zealand dollar, US dollar, Aussie dollar, Swiss. Was loads, you can see. Aussie dollar, US dollar, Pound New Zealand, Pound odd, and Aussie yen. So yeah, really nice morning so far this morning. Got a little bit, tiny little bit of drawdown on three positions there. Bit of drawdown on the Pound yen long. Looks like we got money coming into the yen, safe haven potentially. So yeah, we are getting some movement on that. Two positions taken so far. I'm going to be keeping a very, very close eye on these, and I will be manually getting out of anything that I don't like the look of. So I will keep a close eye on stuff and make sure it doesn't get out of hand, based on obviously whatever I'm banking. Pound yen got long there as well, and a couple on there. So yeah, the H1M5, obviously I've got euros long on those as well. On H1M5, I don't mind too much going long euro, because we're not looking for massive moves with H1. We're looking for small pullbacks to get out on. So it's a lot easier to get out of those positions, and they're scaling in sort of half an ADR apart. So as long as we don't get a massive squeeze, be all right. Famous last words. As long as we don't get a massive squeeze when war's breaking out. Good one. So yeah, we'll see. But I'm going to keep a close eye on all of this today. So good start to the morning. Nice DAX play still going on. Morning, Harry. Remember the Aussie dollar yen I was so stressed about yesterday? Took the extra position, and this morning I was out of my misery. Cool. Yes, we spoke about your Aussie dollar yen position, didn't we? There you go. So there's your profit take. So we were looking at this one. I didn't know where you got in, but did you see what I mean about this climbing up the stairs, falling down the elevator shaft? Yeah. It happens. That's how it happens. So complete A-shaped recovery on that one. Out. You're probably out far too soon, I would imagine. I usually get out far too soon, but I'd rather be out with a profit than be stuck in drawdown. So yeah, nice double bottom going in there at the moment, but just be very careful with everything. Swiss franc, yen, and US dollar based at the moment. Keep a close eye on it. We could see easy 200% ADRs today. We may not. We may. I have no idea. I've never been through a war. Couldn't tell you what's going to happen. So yeah, but yeah, good out of it. That's lovely. So it's a good example of Harry's trade there. Good example of what happens. Yeah, you go into drawdown, and then you get out. That's what the market does. Everybody that bought there had to take profit. Right. So I'm just going to keep flicking back to this every now and again. We're just struggling a little bit. Looking like we've got a bit of indecision coming in. We may well get a pullback on this. And then a push. So a pullback to that down candle. And then hopefully a continuation. Hoping they're going to do the gap fill. The thing that worries me about this trade is we didn't do the gap fill on the others. We didn't manage to get there. So I'm wondering if they're going to come back and do that during London, which would be nice if they did. Usually they fill, when they're that small, they usually fill straight away in Asia. And obviously they didn't get a chance today because the Asian market woke up and went, uh-oh, and everybody dumped their stocks. So, yeah, hoping they'll come up and do that because there's an inefficiency there. So, anywho, right. So let's look at where we are at the moment. So ADRs, loads of them. I would honestly write off today. If you want to trade today, keep it small and keep it tight with stops, because there's every opportunity today at any moment for the banks to make massive adjustments to their books. And it is also the other thing you've got to throw into the melting pot at the moment is the end of the month. So we've got end of month reporting tomorrow, which means that the funds will be offloading positions, balancing books, getting profit in the bank so that they can report to the shareholders that how amazingly they've done. So we tend to get an end of month flurry Thursday, Friday. With what's just happened last night, plus the fact that they'll be wanting to offload positions, we could see a massively volatile day, which is obviously great if you're on the right side of it, but hideous if you're on the wrong side of it. So just be a little bit careful. It may be that they've already factored movement in, and they've done profit takes early, or they've scaled out of positions already. We don't know. But it is end of month as well. Obviously, the 28th is the end of the month, which is... when is the 28th? Don't even know when the 28th is. That is on Monday. But Monday is unlikely Monday they will use to be the day that they do it. They usually do it before a weekend. So I would suspect today and tomorrow is going to be the unloading. So we will see what happens. But... ADRs at the moment, obviously, Aussie dollar yen, we've already just quickly looked at that one. This one is a short against a short, but obviously and the thing we've got to bear in mind at the moment is with these safe haven currencies, the yen, the US and the Swissy, normally that's where money starts to flow into. We haven't seen that happening with what's been going on with Russia and Ukraine. But this morning we are obviously seeing signs of yen strength. So it may be that today is the day that we start to see the piling into the safe havens. So just be a bit careful longing anything against the yen today. They may well all play out absolutely beautifully, and this could just be normal market movement. But the only way you're going to tell is by the end of this day. And if you get into it and you are, we are piling into safe havens, it's too late. So with ADRs today, I would probably only really concentrate on them if we've got extensions on RSI as well. So ideally, if they're in line with COT, tick. If they've got a 4-hour extension, tick. If they've got a 1-hour extension, slightly smaller tick. But don't just get into something because it's extended on ADR today. Have confluence with it. Need to see some kind of support resistance level also, if possible. So Aussie dollar yen actually has got pretty nice confluence down here. This is an area we've been resting at for many, many times. We've tapped into it, rejected it. We've tapped into it, rejected it. We've double bottomed and we're showing signs of bullishness. But if this is piling into safe havens, that is not going to make the blindest bit of difference. Support is irrelevant. So we're extended on the hourly. So we've got a tick there. 4-hour, we're not extended. Yeah. So to be super, super, super safe, yeah, this looks great technically, but I've never traded through an invasion before. So I have no idea what is going to happen. If in doubt, stay out. If you're brave, go for it. And there's a high probability you'll get a trade out of it. But just be prepared to scale in, obviously, and look for levels where we're likely to find some kind of support. Even when money piles into safe havens, like the yen, there will still be profit take moves, but you find that the profit take moves are smaller. So you need to be on your guard and have your wits about you and get out faster. Yeah. Franco, US dollar Swiss hit resistance and trying to leak. We'll push past. Yeah, US dollar Swiss obviously is a difficult one because these are both particularly safe haven. This is why you get a lot of consolidation on US dollar Swiss. They will both push quite often at the same time. and obviously market movement at the same time equals accumulation and consolidation. So, so yeah, I like your analysis. Very calm and logical. It might be calm and logical on the outside. On the inside, there's a turbulent mess going on because I've got no idea what's going to happen today. I don't think anybody has today. You know, and I've been saying it for the last week and a half. I've been keeping my powder as dry as I can because I'm not sure what's going to go on with Ukraine. The day I turn the EAs back on, he decides to press the button. You couldn't make it up, could you? But anyway, bank's decent amount overnight, so I'm happy with that. But I'm going to keep a very, very close eye on everything. So Aussie dollar yen, nicely extended on the hourly, and you've got the ADR. Up to you whether you want to go against the yen at the moment. But, you know, even when these moves here were Russian interventions, and they have all played out. So you may well get a 200 ADR move. If you get in now and it goes against you, getting one ADR away, keep everything spaced out nicely so you're not getting into big drawdown on things. It will all come back. It's just at the moment it might take a bit longer. So the speed of scaling in needs to be controlled if you're position trading. CAD yen. You're doing great. Bloomberg is depressing. Yeah. I watched the market close on Bloomberg yesterday, and I'm not watching it again. Bloomberg is depressing. Doom and gloom. God. Anyway, CAD yen. Same thing with the CAD. All these yens, basically. They're all the same story, basically. Look for confluence. If you've got any 4-hour extensions on the yens, excellent. If they're extended on the hourly, 90% of the ones that are extended on the 4-hourly will be extended on the hourly. To get a 4-hour extension, typically you've had a strong push on the hourly as well. So just be aware of those. You'll probably get bounce backs, but look for where we're going to bounce back to. Look for wick tests. Yeah, so potentially bounce back to there. Look for support levels, potentially for bounce backs. Don't get greedy. Just if you're going to take these long, look for areas where you're likely to be hitting resistance. Yeah, so this one came down straight off of 125 ADR, put in a nice reversal candle, push back up straight into resistance, batted back down again. Yeah, you just got to be fast, really fast, if you're going to take profits on these. But they're all going to be leaving nice propulsion gaps as well, which will come back. These will be tested again at some point. Yeah, that was retested. Push down, came back up, retested it. Yeah, so they will get retested, but you'll find at the moment things may well just squeeze for a little bit longer than normal. So Swiss yen, same thing. Massive extensions. These all look absolutely beautiful. Could all do V-shaped recoveries today. No idea, but that is the play, basically. What goes down has got to come up because they've got to take profit on these moves. Euro Swiss, that's come off of ADR already. So you'd had a reversal on that one during Asia, came back, retested, and already played out. Come straight back up and retested all the propulsion gaps. So that one's already done. If you took that one, that's one I took actually. I think I've got Euro Swiss banked. Euro Pound, already done, straight off of ADR, reversal alert, profit. That one's already banked. You wouldn't have taken these unless you're up in Asia. Euro Yen, struggling. So yeah, this is a good indication, obviously, of how strong the yen is at the moment. The euros, all the other euros have all bounced back. Euro Yen is in accumulation. So you've just had a reversal alert on that, one of those horrible long ones, which I just hate. So yeah, be careful with that one. Euro US dollar as well, you're going to find the same thing. We've got US dollar strength, therefore obviously this is just flagging at the moment. There's your flagpole, there's your flag, look for a breakdown. Pound yen, struggling against the yen. Everything is struggling against the yen at the moment. Pound New Zealand, pound US. So yeah, I mean, just be very, very careful of these. As I say, I would take these with a pinch of salt today. You can ignore the weeklies, obviously, and the monthlies, because obviously we are at the end of the month. So too late to play these. We're at the end of the week. Too late to play these, really. So really, we want to concentrate on RSIs at the minute rather than ADRs. But if you get anything ADR, we have these days every now and again, once every quarter or so, where we see this thing lit up like a Christmas tree. Literally, I think we had, last year we had one day, didn't we, where we had 225 ADR across the board. I can't remember what it was. And there was literally one or two gaps missing, and everything hit 225 ADR. There is every potential for today for that to be the case. Because obviously we've got massive shifts in power, and there's a lot of things happening with sanctions today. So the US and the UK released sanctions which were pitiful. It's like, oh, we're not going to let these 5 banks do anything, and these 3 oligarchs, we're not going to let them do anything either. It's like, well, hey, that's really going to annoy Putin, isn't it? So the sanctions yesterday were just like token gestures to say, hey, we're going to do something if you don't stop. He hasn't stopped. Therefore, today I think we're going to get sanctions released, which are going to be more impactful. But I don't think it's going to make any bit of difference, because they've been hoarding cash for the last 15 years. And sanctions are really not going to affect anything. There's millions and millions and billions in the bank to fund this invasion. And the US turning around and saying, well, you can't use the banking system anymore, is going to make no difference whatsoever. So the tougher sanctions coming out today are going to have more of an economic impact on the rest of the world than Russia. Therefore, we will possibly see currency movements today, because it's going to have a bad potential knock-on effect to us. We also trade with Russia. Everybody does. So if you turn around and say, I'm not going to do business with you anymore, Russia's going to turn around and say, well, never mind. Everyone else is going to go, right, yeah, we need that, like oil and gas. And I think that's where the problems are going to lie. So just be very, 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 very careful with today. Sorry, let me just let me just quickly check my DAX trade. Just want to see if the pullback started. No, it's just flagging at the minute. So looks good. Got nice wicks to the downside. So this candle here is kind of a control candle at the moment. Don't want to see it break that low. Want to see it break that high. Keep an eye on that one. Right, so let's look at RSIs. Hourlies, there's lots. What's the best way to do this today? Probably, yeah. Let's do the 4 hours. These 4 hours are my kind of bread and butter. Aseni, want to look at New Zealand CAD? Yeah, have a look at that. So the 4 hour RSIs are kind of my bread and butters. H4, M15 strategy is my main strategy. The reason I prefer H4 RSI extensions is because to get extended on H4 takes a lot more of a strength move than to get extended on the hourly. So when we get extended on the 4 hour chart, it means there's been much longer sustained buying or selling. And after that movement, then you tend to get a much better profit take move coming through. It doesn't always happen first time. Obviously, sometimes we get another leg before the move. But the 4 hour is obviously stronger. So I would concentrate, if you can, on the 4 hour RSIs at the moment. Let me just quickly look at these ones that people are asking for first. New Zealand dollar CAD. So New Zealand dollar CAD, we looked at this one yesterday, was massively extended on the 4 hour. If you took the initial 4 hour extension here, short, you would have got in there. Your second entry would have been somewhere around, where are we, 60. Yeah, you're either in 2 to 3 positions here, probably. If you took the first extension there, you would have been in somewhere around there. Second trade, potentially somewhere around there. Third trade would have been there. So this morning, down here, you should have been out. If you're not out, obviously you're in 3 positions. So hopefully we're getting the M pattern reversal here. We haven't got the reversal on 4 hour. On hourly, you will definitely have had a reversal alert this morning. So yeah, it's nicely extended. New Zealand dollar, obviously we've got Canadian dollar news this afternoon. Yeah, we've got oil this afternoon basically. Potentially what we're going to see this afternoon is a strengthening of the CAD. I'm assuming the oil, I don't know what the oil stocks are going to be, but oil price has obviously gone through the roof. So potentially we'll see a strengthening in the Canadian dollar, which will give you another leg down. But what you've basically just seen here is a support bounce. So if you weren't out of it there, obviously you're looking for an M pattern reversal, and if you can get back down to there again, I'd probably get out at the minute. You've just got to be safe at the moment. We're very, very extended. The New Zealand dollar is a long, the Canadian dollar is a short. So technically, from a COP perspective, this is a long, and it's been a long since there. So we should be longing the New Zealand dollar CAD, but obviously when you get it so extended, it's worth taking that trade, and that's all you need to get out of it. So, but you will get a bigger move than this. Yeah. So this is a profit take on the move so far. The overall move is that, and we haven't had a decent pullback on that yet. So even if we do get another leg up, you will still get some kind of deep retracement starting at some point. David, gold. I've done gold. You probably missed gold, but long. I've been saying to long gold for a bit now, and obviously especially now even more so. So we were stuck in this nice accumulation. We broke out of these highs and retested. Then we broke out of those highs, and now obviously gold is going through the roof because everybody buys gold when we are in times of trouble. So gold is appreciating, the same as oil. Gold and oil, same thing. They will both go through the roof when we've got things like this going on with Ukraine. So it's a long, but I wouldn't chase it up there. I'd wait for a pullback. So with gold, you're looking for a pullback to this high, into this gap. Up to you if you want to go for it long here. You could take a long there and then obviously scale in on the pullback, ready for the next leg. But yeah, I mean, long. Even with a strong US dollar, you will find gold will still probably push. So, thank you for everything you do in the community. We're regular of yours. Cool. Aaron, Euro Yen taking a beating. He thinks rebound at New York Open. Yeah, Euro Yen. All these yens basically. You've got levels which we are going to find support at, which we've just had. Actually, this is the support bounce you're watching now. This is whenever you see a big move and a retracement starting, put the trend line on the bottom of the candle and look for why are we bouncing. Yeah, we're bouncing because of that. Obviously, this is to do with safe haven pump. So how far we're going to get, I would say probably up to there and then drop again. So these ADR reversals today, obviously, this is not a good looking one at all. Whenever you see the reversal alert that large, it's not a good one to take. So yeah, longs potentially, but you don't know how long this is going to last. Look at the last time we had that kind of movement. Yeah, this is that fake push on the euro, which obviously all got retraced, and then you get the pullback. So measure the move. Like I always say, with any strong move, when you get extended on RSI, stick a fib on it and look for where it's going to retrace to. Yeah, it will always retrace at some point to a 38.50 or a 61.8 retracement as a bare minimum. Yeah, you're either going to get a V-shaped recovery, which case no problem whatsoever, or you're going to get a profit make to move on the second leg down. This profit take move on the second leg down will be a 38.50 or a 61.8 retracement most of the time. If you don't get that, it means that the first leg is not complete, and therefore what they will do is from here they will just put in a sort of bullish candle, and then they will put in another leg down. Why can't I grab my fib? And that next leg might be a 225 ADR move. So as it comes down to here, you look at where the next profit take should be, and it should get back to there. And if that one doesn't work and it goes like that and it puts in a third leg down, you do the same thing. You just keep pulling that fib down until that move is finished. And at some point, that move will be so big that they will go, we have to take profit on it. And that is when you get the leg. So this is a prime example of what we're seeing now. First leg, didn't even pause. Second leg, tiny little pullback. Third leg, profit take. 50% retracement. First leg, maybe just one leg. If not, second leg, maybe just two legs. If not, third leg, profit take. Yeah. And we're playing, when we're position trading, we're playing the profit take moves. First entry, second entry, third entry, exit, profit. Yeah. But we just don't know, do we? We don't know when it's going to happen. So, but that'll be the same with all yen pairs at the moment. All yen pairs will be the same. So just be careful with those. Aaron, funny how reality hit crypto traders watching gold push up can't bread with crypto. Don't know what that means, but that's probably a typo. But yeah, crypto, same thing with crypto. Crypto is now linked to indices. Yeah, so with your cryptos, whatever the indices doing, your cryptos are doing. So don't bother trading the cryptos anymore. Trade the indices, because the indices have got tangible assets behind them, and crypto hasn't. So this is safer. Why bother putting your money into something that can do absolutely crazy moves which can hurt you ridiculously or make you lots of profit, when you can just trade something that is nice and easy to trade? So they're index linked now, pretty much. Yeah, whatever the indices are doing, the crypto pairs are doing. So we just have a quick look at how my trade's going. Yeah, we're not stopping. Good. So I'm just going to stick a quick alert on there. 1 sec. Let's move it down a little bit. 125 ADR. Just want to keep an eye on that. Might do a profit take in a minute. I've emptied all my accounts out as well, by the way. I'm planning to start another account for the live room, which is going to be bigger. To do some more day trading, basically. Right, so let me get with analysis. I keep getting sidetracked today. It's one of those days. Right, 4 hours. Let's do the 4 hour RSIs. I'm not going to bother doing the hourly RSIs because everything here is going to be here. Oh, no, it's gone. There we go. What's the time? 9 o'clock. Yeah, so a lot of this already dropped off. But the pound yen, pound US dollar, we got the pound US dollar and the pound yen obviously on the 4 hours as well. So everything you see on the 4 hours is going to be extended on the hourlies as well. Euro yen, Euro US. The only one that isn't, I think, is the US CAD and the Swiss yen. So let's have a quick look at those first. US CAD on the hourly. So hourly RSI extension is just about hit. It's a marginal hit. I like 70 plus, so wouldn't really be interested in that. And Swiss yen, so that is only just hit as well. You've missed that already. You either got in that on an ADR or you didn't. Oh, mind you, it's only just given an alert, so you could get in that now. It's got a good 40 pips probably to the upside on that. Potentially if we get this pullback on the yens, which we don't know. So 4 hours. Euro odd. First one. So Euro odd, obviously I don't like longing the euro. When it is that extended though, I don't mind. And I obviously took this one this morning and took this one yesterday and it's already played out. So already got out of that with half an ADR and done basically. We got big wicks going into the upside. So potentially we could be starting a second leg. I am taking more positions on the euro long with the EA, but that is only because we haven't really had a profit take yet, have we? So again, we've had this big move down with these tiny little pullbacks. And if this continues to do tiny little pullbacks, I will continue to get out on those tiny little pullbacks where I can, waiting for the big profit take move to come in, which will come at some point. So that one obviously is only just extended now because it's already kind of played out. Euro CAD still got very extended. That's already played out as well this morning. So you kind of missed that. Maybe not actually, because there's a late reversal alert on that one. So Canadian dollar potentially could be powering up this afternoon, which could push this further down. So I'm just letting the EA trade these for me at the minute. Looking for levels potentially for a bounce. We've got a bounce point here, which is where we are at the moment, putting a bullish engulfing in. So if this puts down another leg, we'll be looking for additional entries as we come down, waiting for a move back to the upside. The Canadian dollar is very volatile to do with oil. So you will find that this will have these big moves based on oil, and it will just kick the euro around. So whenever you get a big strong move in one direction, you might need to get into a couple, but you'll always get that profit take move because the Canadian dollar goes the opposite direction. So Euro CAD, Euro Swiss along as well. Again, money piling into the Swiss franc potentially with what's going on at the moment. So we could see much swifter move to the downside on that one. Euro Swiss is the more difficult one to trade. This has been in a downtrend for an absolute age. We've just put in a pullback, and then we put a new low in, and then we put this massive crazy move in. This was to do with the euro rate announcement. This was not a move. They immediately corrected the whole thing and went, whoops, that was wrong. Even the ECB came out and said, we think you might have overreacted to what we said with the rates, and the market went, yeah, and that dumped. So still down, looking for shorts, obviously, on this one in line with COT. But short term, obviously, you can just play the bounces. Still going to get the bounces on the Euro Swiss. As the Swiss franc powers up and weakens, the euro will obviously put that zigzag in and get you out of positions. Euro New Zealand, we had that massive run on New Zealand dollar, really, really, really extended. See again, didn't get that pullback, putting the fib down. So we haven't had a profit take on this entire move. I've got a long on this at the moment. On Euro Odd, I got out. Euro New Zealand, obviously, it's not moved far enough. This is going to come back and do a retracement at some point, but just waiting for the New Zealand dollar to weaken a little bit more. It's a bit strong at the minute. Euro US dollar, again, be careful with the US dollar, likely to power up. We pulled straight back into there, found buyers at 125 ADR, and it's pushing at the moment. Any of these moves which are dramatic like this, and we're getting these big, strong pushes down, we will get those profit take pullbacks on at some point. Again, ignore that. That was just a market overreaction which got corrected. So this is potentially what you could be getting into with the US dollar, a 2 to 3 week push. Yeah, this could be what is starting here, because obviously money's going to start potentially flowing into the US dollar with what's going on. So if that does happen, obviously you may be in a 2 to 3 week squeeze, and obviously then you just have to wait for the pullback on the squeeze, which happens sometimes. But I would rather be shorting the euros, obviously, still. Pound Swiss is nice. So pound is long, and we are very, very, very extended. Now the pound had a really bad day yesterday. It's recovered quite a bit actually on some of the pairs. Pound Swiss, not so much. So pound Swiss is very extended, obviously based on Swiss franc movement, I guess, at the minute, and pound yen as well. So both of these two very, very, very extended. The further the extensions, obviously, the better. If we can get up to 25 or 20, even better to get into. We've got a level coming up down here on both of these, which potentially are going to act as double bottom bounce points, where we've got this V-shaped recovery. So if this doesn't start a pullback from here and give you an out, there's not really a lot from where we are at the moment all the way down to there to stop it. No support resistance levels really that are obvious. So I suspect what we will do is get an orderly drop back down to those levels. In which case, obviously, you can get in and get out, get in and get out, get in and get out. The pound is along at the moment, so there is every potential that this could at any point just go back into positive market structure. If that happens, it's not a problem at all. So the pounds are better longs than the euros, just because we've got a positive futures bias on the pound. So we should be seeing more strength coming through on the pound. But again, what happens with sanctions and what impact that's going to have on the currencies, I don't know. So bleh. Who knows? At the moment, it's just you just have to play it by ear. You either sit on your hands and don't trade, or you trade and you're potentially in a higher risk environment, which means potentially you may have to sit through a bit more drawdown than normal. We don't know, do we? So we'll have to see what happens. But these 2 days, today and tomorrow, are going to be fairly critical, because we're going to go see a lot of volatility in the market to do with Ukraine and Russia. We're also going to see a lot of volatility in the market to do with end of month position loading and unloading. So good, strong couple of days ahead. But I've got my EA set up basically just to get me in and out based on my rules, and that's what it's going to do. And I will manage those positions accordingly. But good RSI extensions there. Unfortunately, most of them on the euro, and obviously they are a riskier long. So don't load up on all of them. Pick one, maybe at the minute, or two maximum. Don't load up on all of them. Otherwise, you are going to get yourself well over leveraged. Pound yen and pound US dollar on the hourlies, absolutely shot. So yeah, these two exhausted. 150 ADR already, and we've only just opened London. So that is obviously where we're coming back up to at some point. Whether we're going to get the pullback today or not, who knows? But at some point, if we do push down, we're coming back here. So there's your exit point. Same with the pound US. There's no propulsion gaps on the pound US. That's interesting. We are just pulling into one actually at the moment. This old one here. This isn't not a great one. I wouldn't say that. I like my propulsion gaps to be after a nice flat accumulation. This one is after the start of a run. So we will find buyers in there, but potentially not so many. So these propulsion gaps obviously are where there's lots of order dumps going in, lots of buyers going in, and those buyers will actually be longer term buyers. So they're the guys that bought here after this accumulation. We broke the highs and then obviously just went into a complete sideways, and this is the US dollar basically, that uncertainty on the US dollar that we've had for the last few weeks now unfolding. So still lots of decent levels of potential support resistance on the way down, but there's your ultimate button. So if you're getting a get in, just, with all position trading, normally you need to make sure you scale out, you space out your positions nicely. At the moment, even more so, I would probably say at the moment you want to be looking at 3/4 to an ADR between your entries, no closer. Otherwise, you're going to potentially get into a bit of trouble. And obviously make sure you don't get into too many pairs in the same currency, as usual. Aaron, buy bread. Yeah. Ian, with 5 positions currently at break-even level, should wait to bank half an ADR. Break-even is 167.518 Euro New Zealand. So that's your break-even, 167.518, roughly there. Yeah, I mean, that is resistance. We're not happy about going above there. There's a lot of sellers stepping in off the back of this move in Asia. That's the New Zealand dollar rate announcement yesterday, which obviously is where there was a lot of buyers coming in to the New Zealand dollar, and obviously they are defending that position. So it's a difficult one. It's up to you. As it's the euro, I would be more cautious. What I would probably do, if you're in 5 positions on this, it's up to you obviously what you do, but if that's your break even, you've obviously got a couple of positions on fairly close down here, and obviously a few up there somewhere, I would guess, and maybe one somewhere around here. You could take that off, maybe close out that one completely, and close out a little bit of that one. It depends what you can bank, yeah? So let's say, for example, you can bank 1% on those 2 positions, yeah, where it is now. If this one is in, that's probably going to be in about 1%. That'll probably be in about 0.7%. That one's going to be about 0.2% in drawdown, yeah? So you can use, if you banked 1% there, for example, you can use 0.5% to do drawdown control, yeah? So what you could do is you could close off 50% of that position, You could close that one off completely. Or you could close 40% off of that one, close that one off completely. Or you could close 40% off of that one, and you could close maybe 20% off of that one. Up to you. But you always want to try and do your drawdown control as much as possible on the biggest position, the one furthest away. So if you can bank 1%, and this is in 1% of drawdown, take off half of that. If you can bank 2% on this move, and this is only 1.5% in drawdown, take off 0.75 of it. So you're always trying to remove the worst position first, because what that does by removing lot size from there is it brings your average down further. Yeah, so we're trying to keep our average within an ADR. So this is why we always try and work on the furthest one. But sometimes the furthest one is obviously going to be the most difficult one, because you're going to have to take more of a loss on it. So it's quite often tempting to take off the second position, and you can not quite often take that one off completely. And remember, what we're doing with drawdown control is we are trying to reduce our speed, our drawdown speed, our rate of drawdown, and the amount of drawdown percentage that we're going into. So regardless of which of those you take off, if they're roughly the same lot size, you're going to reduce your drawdown by that lot size. So they're both good to take off. But it's difficult at the moment to obviously know what to do. If you're worried, yeah, and you can get back to here at break even and take the whole lot off and make 0, what have you lost? And what you've got? A nice night's sleep, not having to worry about it. Yeah. With what's going on at the minute, I haven't got a clue. This thing today could just go like that, and you could kick yourself. But either way, if you get off at break even, you've lost nothing, and you've gained confidence in the fact that you've seen the market play out as we expect it to. And that is worth more weight than gold, actually getting into 5 positions in drawdown and seeing yourself escaping those positions, because it gives you confidence in the system, the strategy, and the way of trading. But if you want to bank a profit, do a little bit of drawdown control. If you want to be safe, use all of the profit to do drawdown control, and then maybe you'll only be in 2 positions short, and you're well within an ADR. You know, don't forget, if you've got a position here, for example, and a position here, and that is where your break even is, if you take this one off and that one off and bank them, what you can do is put those positions back on. So put a pending order down there. So if it comes back down here and then does that, you can bank it twice, 2 times the profit. And you can use all of that profit then to get rid of that one and get rid of half of that one and make it much easier. Yeah, every time you take a profit off, you can put that back on. That's the beauty of position trading. If we go into a range in drawdown, we can get in and out, in and out, in and out. Every time we take a position off, we put it back on again. And if it goes in and out, in and out, in and out 10 times, fantastic. I'm going to bank 10 times. And all that drawdown up there is going to be gone immediately, isn't it? So best case scenario really is it goes into a range now for a week, and you just keep banking money. But up to you. Can't really answer that question. Everybody is different. Everybody has different pain thresholds. Everybody's in different positions. You know, at different times with different drawdown amounts. Some people have got into positions too fast and they're in more pain than normal. And if you're in more pain than normal, get yourself out of that pain as fast as possible and get yourself back to a position you should be in, which is roughly half an ADR to an ADR between positions. Does that make sense? Franco, I'm not a scalper, but that seems to be the game tonight. Yeah. It's been the game for me for the last week and a half, scalping. I'm unsure as to what is going on with the market at the minute. I don't know what this is doing. We haven't got there yet, have we? Didn't set my little alarm off. I'm going to reduce risk on this. I'll still take a loss on it if it goes against me, but I'm just going to reduce risk. The reason I'm moving that down up to there is because if we are going to pull back and push on this, I'm just moving it down a little bit just in case it spreads. If we are going to pull back and push on this candle is where I would expect the pullback to come to, which is going to be roughly a 50% retracement on this move, and then continue. If we are not going to do this gap fill and we're going to collapse at a rate of knots, I want to be out with less risk. I'd rather not take that loss. I'll take some loss, but I'd rather not take the full loss on 4 positions. So I've scaled into it fairly nicely and evenly, but we're looking like a bearish engulfing at the moment, so potentially we're starting a pullback. We've got still 3 minutes left on this candle, so it's still within that range at the minute. But we'll see. Super awesome guideline on EN. Cool. So that's really all I wanted to cover this morning. As I say, just play it safe if you can at the minute. Cold coffee, lovely. Yeah, bear in mind, obviously, at any moment we could have some news come out that is going to impact the markets dramatically. But it looks to me at the minute like it's fairly stable across FX. I'm watching all the FX markets on my other monitor. The US dollar is the main thing that is moving at the minute. The Dixie's having a really good push, which is obviously pushing down pound US dollar. It's gold is still pushing up. You know, the strength we've got in the US dollar at the moment, and the gold is actually consolidating and pushing higher, is just shows you how strong gold is at the minute. Aussie US is holding up well. New Zealand US is holding up well. US dollar Swiss, we've got a 3-bar reversal just going on US dollar Swiss. It's a nice long signal. So yeah, everything seems to be fairly orderly, which is nice. We're not getting any massive knee-jerk reactions, apart from obviously on oil and the indices. So oil is still going, which is nice because I'm long. Yeah, pound US dollar, we just hit the weekly ranges. Ignore the weekly ranges today. US dollar yen's hit, US dollar CAD, New Zealand US, loads of hits across the board at the minute. So yeah, interesting. Quick question on the Telegram group, does everything under the files tab come from you? No. Everything under the files tab is everything that's been posted in the Telegram group. So there's lots of stuff in there, pictures of images of whatever everybody else has put in there. So a lot of the stuff in the group is mine, obviously, but it's not all me. Franco, thank you. We'll be back. I actually learned something. Excellent. That's good. That's what we're here for, to educate. Bearish engulfing going in at the moment. What do I do? Do I trust the gap fill? Tricky. It's a very tricky one. Didn't quite get the bearish engulf. We got the bearish engulfing. We didn't break the low. Interesting. For those of you that have just bought the new trade manager, the new price action toolkit that I pushed out secretly yesterday and everyone jumped on. Obviously, I'm going to do the docs this morning. I'm going to do a video on it. What's just happened there is a really good example of one of the settings in that. Let me just open another chart on that. Blank, blank, blank. Where are you? Just to explain it while I've just seen it happening. This setting here oh no, sorry, not that setting there. One sec, go away dashboard. This setting here, under exit strategies, close trades on reversal candle. Yeah. So the way that works is basically what time frame was that on? M15. There we go. So the way that works is, if you're in a long, like I am at the moment, exit on a reversal candle means what it will do is when you get into longs, it will trail a fictional, invisible stop underneath the low of every bull candle. Yeah. Right. So what it's doing at the moment, if I had that setting on, it would trail my stop here underneath that candle. If you get a bear candle that closes below the low of the last bull candle, it will exit your trades automatically for you. So if I'd have had that setting turned on, what it would do is it would get me out when that closes below. So right there, it would not have got me out of that position because my stop is there. The candle has to close below, and that would have then exited that position for me. So what that setting is designed to do is to allow you to ride a trend. And typically in a trend, when a trend starts, the bears will not be able to break the lows of bull candles, as you can see here. Yeah, every single bull candle is held up. We get a bear candle, but as long as it's an inside bar, i.e. it does not close below the low of the previous bar, which is bullish, that carries on. So it keeps you in the trade while you're getting that nice strong trend going. So I just saw that, and that's a perfect example of what that setting is. So it's called close trades on reversal, and by reversal is a bearish reversal below the low of the last bull candle. So just thought I'd pop that one in there while I saw it happen. Mark, I've put the EA on live, but reduced risk to 0.1 from 0.25. Yeah, good idea. Very good idea. In fact, that's a brilliant idea. I might follow you on that. So yeah, with the market reversal alerts EA, normally everything's set up to trade a quarter of a percent risk on an ADR basis, and yeah, if you reduce it to 0.1, you're obviously going to be taking half as much risk, or just under half as much risk, which at the moment is not a bad idea. God, these spammers in the Telegram group. There's something wrong with my my group help in Telegram. It usually gets rid of all these spammers, but it's designed to stop people posting links. What they're doing is they're posting links to Telegram, and Telegram seems to allow those types of links. So I have to clear it up every now and again. But anyway. Right, so this morning, what I'm planning to do is, obviously I released the new price action toolkit yesterday. I haven't had a chance to do the manual, haven't done a video on it, I haven't done anything on it yet. So obviously I wasn't expecting everybody to suddenly jump on it and buy it without any indication of what it does, apart from that video I put out in the Telegram group last week. So it is pretty much exactly as the video in the Telegram group. I've just tidied stuff up, moved stuff around and blah, blah, blah. So what I'm planning to do is to record a video going through every single setting, what it does, how it works, the logic behind it. And obviously I will do a full blog manual for it as well, so that you can read up on exactly what it does. But I'm going to do that video hopefully this morning. I'm planning to do it at 11 o'clock. So I will probably do it live. So if you want to come and have a look at that, I will post it in the Telegram group in a minute. And obviously, if you've hit the subscribe button and hit the notification bell, you'll get a notification when I go live on YouTube as well. So I'll probably live stream that. And then obviously you can ask questions as well while I'm doing it. And then obviously that will just be up on YouTube as the explanation video for what everything does. But it'd be nice to have interaction, obviously, if you've got this or you're interested in it, then you can ask questions while I'm going through it. But it's probably going to be about an hour, hour and a half to cover everything that this does, the logic behind it, why it does it, and then obviously open to suggestions for tweaking it. I know Rahat's already said to suggested a tweak for the candlestick patterns. So like that one we just had there. God, that's low, isn't it? So that's a strong close candle, basically, signal. I don't know why that's not up. Should be up there somewhere. That I might need to adjust that. But these candlestick pattern recognition system only kicks in at the Frankfurt Open. Yeah, that's the Frankfurt Open. And it's only designed to give you these sort of pattern signals painted when there's liquidity in the market. Nobody really trades indices, and I built this to trade indexes predominantly, but you can obviously trade anything with it on any time frame you like. But obviously that's why it only paints those, and it hasn't painted them in Asia, because usually Asia price action is not anywhere near as effective as when we are in market open. So Frankfurt 8 o'clock UK time is typically when things start to get moving, as you can see. So that candle there was the opening range of Frankfurt, and before that obviously everything was very, very small. So that's why, and obviously I can tweak that, but we'll cover that when we do the video later. So one more question: on your MT4, when using the strategy tester, how does someone get access to tick data? You have to buy it, basically. So I haven't got it on this MT4 tick data, because this is on my other machine. On my main trading PC, I have the tick data suite, where you can download tick data. So this is the website for it. It's called eareview.net. I'll put it in there for you. And I think it's $50 or something. Oh no, it's not. It's more expensive than that. It's $80, £80 a year. So it is quite expensive, but it is very, very, very high quality data. And this is the data that I use to test with. And you can get it from multiple sources, Boocamp, Darwin-X. There's lots of different sources you can get it from. So if you want long-term tick data for long-term analysis and testing, I would recommend getting that. And it integrates automatically with your MT4. So when you install this, you can do a trial of it as well to give it a trial. When you get this, obviously, it just pops up in here. So in my other MT4, I have a box here called Tick Data Suite. It's a checkbox. And I can check that, and it uses tick data. And tick data goes back 15 odd years. So when you're testing anything, it's fine testing in your broker, on your broker's feed, but your broker's feed will only go back a certain amount of time, and broker data is sometimes a bit hit and miss. So I would always recommend using proper tick data if you want to do proper testing yourself for anything, really. Yeah, I mean, there's lots of different ways to do back testing, but that is kind of the holy grail, tick data suite. There's others out there. If you just Google tick data, there's lots of places to buy it, but I researched all of this when I wanted to find a good tick data supplier. And that website, eareview.net, was the one that had kind of what looked like the best data, the best range of different places to get it from, and was the most economic to buy, really. But if you're with Darwin-X, if you go and get an account with Darwin-X, Darwin-X actually provides you with data for free as well, but it is obviously Darwin-X data. So, you know. Doreen, hello. Does the MT5 market reversal alert indicator work on indices like VIX? Yep. Market reversal alert indicator works on everything. Everything has market structure. Still pushing nicely. Yeah, so everything has market structure. I haven't got the VIX. I don't trade synthetics because they're made by your broker for your broker, which is why everybody uses Deriv. Deriv manipulate that data how they see fit. Just be very, very careful with synthetics. But yeah, market structure works on everything. Yeah, so everything has market structure. Yeah, and the market reversal alerts indicator tells you when there is a break in structure. And that's its job. So as long as it's got market structure, i.e. as long as it moves up and down, which it does, it works. It works on everything. And all time frames, yeah, this market structure is prevalent everywhere. All time frames, yeah. So you get reversal alerts on M15, you get them on M30, you get them on hourly, yeah, 4 hourly. Structure is structure, yeah. When there is a new break in structure, you get in. Same thing. Same is works everywhere. All time frames. The market's a fractal. So as you zoom in and zoom out, you're seeing the same data just closer in, and the structure is repeated across all time frames. It's just the smaller the time frame, the more choppy it is, and the more opportunities there are to trade. Yeah. So when you get one H4 reversal there in that period of movement in a week, that took a week for that reversal to actually happen. If you look at that on M15, you will have had tons and tons and tons of reversal alerts. So you just get more opportunities to trade. But obviously, the lower the time frame you go, the more chop you get. The more chop you get, the more you get stopped out. So the more difficult it is to trade. So it's a payoff between quality of signal and opportunities to trade, basically. Pick a time frame and stick to it. It's one thing you need to decide when you start trading, you've got to decide what time frame you want to trade, and that is generally dictated by your job. If you work a full-time job, you can't trade M5 or M15 because you're at work, but you can trade H4 because you only need to check that 3 times a day. And to a certain extent, you can trade hourly as well, because it takes quite a long time for an hourly reversal alert to kick in. But if you get the EA, obviously, the market reversal alerts EA, you can trade whatever you want. It does it for you. That's its job. Right, so that's all I've got for you today so far. So I'm planning to do the live room for the new EA at 11 o'clock in about an hour and a quarter. I'll put a post out about that, and it will just be a run through of all the settings, and obviously you can ask questions there. And then I will spend the rest of the day starting to write the manual for it. And then obviously I haven't put out an advert or anything for it to say it's live yet. I just posted it yesterday to somebody that said they're interested in it, and obviously everyone went and bought it. So I'm behind on the explanation and the technical part, and I will get that sorted today for you. So you will know what the hell's going on with it. All right, so I'll leave it there. News-wise, obviously just be aware before I come on at 2 o'clock, which is the next live session, we've got GDP for the US dollar. So could be some decent movement on the US dollar. It's forecast to be increased. If it comes out as increased or higher, we'll probably see a push on the US. So see what happens with that one. But yeah, be aware of that at 130. So any trades that you're in on the US dollar could well have some impact. That will quite often impact the yen as well. So a lot of these movements we're seeing today on the yen, they could well also be impacted by that news at 130. So we'll have a look at the aftermath of that at 2 o'clock when I come back on. I've got to go out to the dentist this afternoon, unfortunately. So the live room this afternoon, I'm not going to do any futures trading this afternoon because I haven't got enough time, unfortunately. I don't want to get stuck trying to get into a trade and then have to disappear off to the dentist. So I'm just going to do the normal analysis this afternoon, and then obviously anything else we want to cover. And then obviously back tomorrow morning. So, all right. So I'll put a note in the Telegram group in a minute about the live room that I'll do at 11 o'clock, and I'll get that scheduled in. And then, yeah, we'll cover that, and I'll be back this afternoon at 2 o'clock for the normal afternoon analysis ahead of New York Open. All right. Have a good morning. Trade safe with what's going on at the minute. And if you need anything, come into the Telegram group. All right. So see you this afternoon, or at 11 o'clock if you're going to join me for that as well. Okay. Have a good one.